Welcome back to the channel, guys. At the moment we are talking about my favorite TradingView indicator called TheSignaler. Now there is a 7-day free trial going on, so please check the links in the description and get involved with that. Now this indicator is perfect for smart money concept traders or ICT teachings. It is very versatile and it has something for everyone. This is not financial advice, this is for educational purposes only. Let's jump to the charts. So guys, here we are on the Ethereum versus USD chart. Now to get the indicator on, you just need to go to indicators, invite only, and click on the signaler. Now what this will then show is this on your chart, and our sponsor today is helping people scale their privacy online. Now if you're trying to automate your business online, then you are going to need a proxy. Proxy for You is the best and by far the most reasonable proxy provider out there in the market today. You get fast, reliable proxies with unlimited bandwidth. Whether you're scraping bots or just browsing, it is perfect for you. Go to Proxy for You today with all the links that you need in the description below. What do you say? Let's get back to the video. Now, we're just going to talk through the smart money concept style, right? So listen, here we have a Chock Plus. Think of this as your bigger leg. This is your larger swing moves. You got Boss Plus up here, then you got a Chock. That means a change of character. That means you've gone from bullish to bearish or bearish to bullish. It is your change of character. So the larger leg is bearish. We come back up, have that pullback, and then we get a Boss Plus, which is a break of structure. So that means that the larger leg is still very much bearish. We come up and then we continue going down. So overall, we are bearish in the bigger picture, okay? The next thing to note is the smaller market structure, okay? You have Boss with the dotted line, Boss, Boss, Chock, Chock, Boss, Boss, Chock, Chock, Boss. Now this is your smaller time market structure. And this is arguably the more immediate one, right? So the way I like to view it is you're very bearish in the bigger picture. You get a Chock down, so you can argue that we're going to continue lower just to complete the swing, right? Think of it as a wave. You go up, you go down, you go up, you go down. And basically you're just trying to be a part of the flow of the market. And this indicator shows you that, okay? So coming into this Ethereum trade that we have, okay? So we're bearish, bigger picture, okay? Boss Plus, so we are bearish. So the trade that I'm about to show you is a counter trend trade, which I do not mind taking as long as the TP is reasonable, as I would be continuing to assume that the structure is going to be bearish, right? I'm not going to get into why I think that this particular trade is going to run higher. It's more the fact that, you know, we've started to slide down, we break back up. This is a nice bit of liquidity to take. So if you're going to go anywhere, it's at least going to take the high here, right? And then maybe run some liquidity here. But that's a bit more technical, right? We're just going to talk about what the indicator gives you. So as we start to push up, okay, you can see that you've got the candles have turned from purple to blue. And this basically means that the flow of the market has turned bullish. You haven't got your Chock, but you know, this indicator is also based on volume, and you can see that we are very bullish. So the TP here, right? The entry is here. You can see it's giving you the signal. You're going to put your stop loss here, right? And the TP one is here. The stop loss is based on the average true range. So it's a volume thing, right? And if you imagine sort of a Bollinger Band around the price, the average true range is just sort of showing that, right? So you might wonder why the stop loss is not behind the structural point. It's because it's based on the average true range. If you wanted to put it behind the structural point, that's fine, you can do that. But often this gives you a much more aggressive stop loss that shouldn't be taken out due to the average true range, which is normally quite a nice prediction, to be honest. Now, the take profit is based on just 1R, 2R, 3R. So you can see here, 1, 2, 3. That's 1R, 2R, 3R. Now, as I said, this is a counter trend trade, right? So I don't mind taking it as long as the TP wasn't past here. Ideally, my TP would have been around the 50% mark, right? I said we're going to take this, so I would have liked it to be around here, but you need a 1-to-1 to trade this. There's no point taking anything less. You know, this is a 0.3. This is a waste of everybody's time, right? So you can take a 1-to-1. Like I said, I've got pretty strong reason for it to start coming back. So this is a trade I was quite happy with. My technical analysis has shown me what I need to see. Okay, so I'm now in this trade, right? And we come back a little bit. That's not a problem. We start pissing around, but then eventually we start to push up. Okay, right there. And you slap it. So this trade I got in just after 9 o'clock and I'd hit my profit by 4 o'clock, right? So the trade ran for the whole day. You got to understand there was a lot of messing around here, but it is a structural point. So of course it's going to do that. I said it would run that. I said it would take some of this liquidity, and it has broken this at the end. I was never going to put my take profit here because I would never expect it to break the structure. That's just, it's not the best, right, when you're thinking about that, right? So just logically, TP1 seemed a pretty good bet, right? Now that was a 1-to-1. So to put that in monetary terms, if you've got a 100 grand account and you're risking 1%, you would have been risking $1,000, right? And hitting your TP1, you've just made $1,000. So for a Thursday, this was a nice win for me. You know, I took it, I'm done, and I go and play my round of golf. I left the trade running all day, come back, and it is hit TP, which is great. You know, when you talk about TP2s, I mean, to be honest with you, anything after that structural point is just a guess. So letting it run, I mean, it's just, you know, you don't really know how far it's going to run for, to be honest. And coming into the end of the day, there's no volatility, so it's just kind of pointless, right? So just take your profit at TP1 and be done with it. Now, as I said, there is a 7-day free trial, as you can see. So you can test this on your chart for 7 days. This isn't one day where you've got to work it out. Get it on your chart, get familiar with it, get your settings put in a way that you want them, whether you're ICT, Smart Money Concept, or even have your own brand of strategy. Like I said, there's such a versatility to this indicator where you can literally have it on your chart as you want it. And it means that you don't have to chart up anything else, right? And you can track real data because the indicator is very consistent. Once you've done that, go ahead, get the lifetime, okay? So 597, it's more than half the price, which, to be honest, is not going to stay like that. It's just because this indicator is new and, you know, you get your discount when things are new, quite frankly. So get your 7-day trial, get your lifetime, and obviously make your money back with the profits that this indicator gives you. So as you can see, guys, I've shown you how to take wins on Bitcoin, gold, and today I've obviously shown you how I took a cheeky win on Ethereum. All the links you need are in the description below. Make sure you grab that 7-day free trial and try this out yourself. And don't forget to hit the like, hit the subscribe, and hit the bell button so you can be alerted on my next videos.